Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of stock index futures. I'll start with the UK FTSE futures. A second consecutive bearish opening black Mariposa yesterday, which was a continuing suitable follow-on lower to the previous session's key reversal down. It was also the second consecutive close below the lower trend line, currently at 73.89, of the more acute one of the two rising wedge patterns currently in operation, one within another. This one is from very late September to very early November, and it has a target X below in the 71.93 area. Perhaps more importantly, the market pierced and closed right on the lower trend line, currently 72.58, of the second larger mid to late September rising wedge pattern, a less acute one. The lower trend line for this pattern is currently at 72.58. What's now standing in the way to the target X is the combination of the June high at 72.17.5 and the old 50% projected Fibonacci line at 72.15. Further down we have the slowly rising short medium moving average, currently at 71.45, entering the frame, and below that the slowly rising medium moving average, currently 7100, likely entering the frame, and soon. Now so far today, a higher open back up over the less acute rising wedge trendline, halting right on the lesser projected Fibonacci line at 72.87 before vault facing and dropping down through the rising wedge trendline and punching through the important combination of 50% Fibonacci projected Fibonacci line at 72.15 and the June high at 72.17.5, and going a long way towards target X. The market has since recovered back up over both of these, but then gone back down again. In the process of today's action, we have set up for a possible key reversal today. So if we close tonight either over 72.79 or under 72.47, then we'd be on. At the moment we are looking at a possible key reversal down. Anything in between would be a lesser outside day. German DAX futures. A very significant piece of action yesterday. Yes, it was a new all-time high and high open. However, it was also a combined key reversal down and bearish engulfing pattern. Something you would not like to see out there if you were a bull. Now admittedly, the bearish engulfing pattern was not the hardest thing to create after the previous session's indecisive doji cross. Nevertheless, the key reversal down was much harder to construct, especially where it was situated. Overall, we are still within the large bull channel, currently 16.082 to 16.430. With a little above and now entering the frame the June to date upper trend line, though admittedly only a 2-pointer, and that's currently at 16.376. I suspect this may be the cause of the current bearishness. Meanwhile, below, well outside the bull channel, it's, as I've previously stated, bar this congestion around the highs roughly between the lesser projected Fibonacci level at 15.970 and the previous all-time high at 16.024. We have little in the way until the congestion some way below, which includes within it the 50% projected Fibonacci line of 15.629, the slowly rising medium moving average, currently 15.658, and a short medium moving average, currently 15.623. So far today, slightly higher open, a new all-time high, but the market has reverted back down, extending down below yesterday's low and threatening the lower rising wedge trendline before pulling back up a little. This action has created an unusual and somewhat rare pattern, a potential second key reversal immediately after a first. Now this could be an immediate countering key reversal up, which is not that uncommon, in which case we'd have to see a close above the 16.248 area. Or it could be a very rare compound key reversal down, effectively a key reversal down immediately after an earlier key reversal down. In this case we'd have to have a close below 16.215. Anything in between, and we'll have it be a lesser outside day. Well, right now we are well on the way to actually making a compound key reversal down today. US E-mini S&P futures. Countering everything we've seen elsewhere, this market yesterday made a new all-time high, high open, high close, and higher low. More importantly, it made it with, of all things, a key reversal up. That was the first proper close over the important 50% projected Fibonacci line of 46.95. What was also interesting was how the market utilized the lower trend line, currently at 46.72, of the old June to September rising wedge pattern. That's currently 46.72 to 47.06 on the top. And that was a support and the upper trend line to close the actual day itself. This rising wedge pattern is getting narrower and narrower, and I wonder as to its utility beyond this week. Further up we have a speculative possible target X in the 47.72 area. This target X is for this same broken old rising wedge pattern. I'm not overly keen on this idea topside, but it seems appropriate that I should share it just in case. Meanwhile, further below, with support at the September high at 45.49.5. So far today, a slightly lower open, but still a new all-time high open again on the upper trend line this time, and a new all-time high as well. However, the market has since gotten some altitude sickness and dropped down just below the 50% projected Fibonacci line, and still within the broken rising wedge pattern. French CAC 40 futures. Finally, a bearish pattern here yesterday after 9 previous bullish white soldiers. However, it was still a new all-time high and high open. Nevertheless, it mattered what it ended up being rather than what it did during the session. In this case, it ended up being a combined key reversal down and bearish engulfing pattern. Interestingly, the range was bracketed between the old 100% projected Fibonacci line at 71.36 and a separate overhead 50% projected Fibonacci line at 71.85. However, you can't get away from the fact that a key reversal down is the last thing the bulls out there would have liked to have seen at the top of the market. Anyway, some background stuff now. Price is now well within target X1, well over target X1 in the 17.95 area. This was the initial target for the recent June to October diamond continuation pattern. We now still have a secondary target X2 in the 72.75 area, which would obviously be harder to achieve. More so after yesterday. Further down we have congestion in the 70.31 to 70.45 area, though it is new and untested and not that big as well. Well, so far today, a rare day. We have not only a new significantly higher open, thus we have a new all-time high open, but the market also made another new all-time high as well. Now, before you get too carried away, the market then dropped down through the 100% projected Fibonacci line at 71.36, halting in the region of the old target X1 for now. Thus we have a possible rare pattern in the offing. We could move back up, and if prices tonight close over 71.57, then would have an immediate countering key reversal up. However, if we close tonight below 71.42, then we would have a second matching if larger key reversal down, or what I usually refer to as a compound key reversal down. Anything in between and would have a lesser outside day. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADMISI Investor Services International Limited. And here comes the final bit.